So Prime XBT is a crypto exchange where you can trade crypto futures, the global markets and அவங்களோட ஒரு முக்கியமான ஃபியூச்சர் வந்துட்டு காப்பி ட்ரேடிங். இதை பற்றி ஃபர்தராக பார்ப்போம். குளோபல் மார்க்கெட்ஸ் இந்த சென்ஸ் வந்து நீங்கள் எஃப்எக்ஸ் ட்ரேட் பண்ணிக்கலாம், சிஎஃப்டிஸ் ட்ரேட் பண்ணிக்கலாம், அண்ட் தென் ஆல்சோ கமாடிட்டிஸும் ட்ரேட் பண்ணிக்கலாம். சிஎஃப்டிஸ் இந்த சென்ஸ் வந்து உங்களால் டாக்ஸ் ட்ரேட் பண்ண முடியும், US 500 ட்ரேட் பண்ண முடியும், US 100 ட்ரேட் பண்ண முடியும், அண்ட் தென் ஆல்சோ US 30 ட்ரேட் பண்ண முடியும். அவங்களோட வெப்சைட்டில் they have 24/7 கஸ்டமர் சர்வீஸ் அண்ட் ஆல்சோ ஃபர்தர் இன்ஃபர்மேஷன் பற்றி தெரிஞ்சுக்கணும்னா ஃப்ரீக்வெண்ட்லி ஆஸ்க்ட் கொஸ்டின்ஸ் FAQs வந்துட்டு பார்த்துக்கோங்க. இப்போ உள்ளே போயிட்டு இதோட டேஷ்போர்ட் எப்படி இருக்குன்னு சொல்லிட்டு ஒரு சின்ன ஓவர்வியூ பார்த்துட்டு அண்ட் தென் வில் கோ இன்டு தி இன்ஃபர்மேஷன் அபவுட் தி பூட் கேம்ப். ஸோ இதுதான் அவங்களோட டேஷ்போர்ட். ஸோ ஹியர் வி ஹாவ் தி மெயின் டேஷ்போர்ட் அண்ட் இங்கே நோக்கில் நம்மளோட டோட்டல் ஃபண்ட்ஸ் வந்துட்டு காமிக்கும், அண்ட் தென் வாலெட்டோட இன்ஃபர்மேஷன் காமிக்கும், குளோபல் மார்க்கெட்டில் இருக்கிற அக்கௌண்ட் பேலன்ஸோட இன்ஃபர்மேஷன், கிரிப்டோ ஃபியூச்சர்ஸ் மார்க்கெட்டில் இருக்க அக்கௌண்ட்டோட இன்ஃபர்மேஷன் வந்துட்டு காமிக்கும். அண்ட் தென் ட்ரேட்குள்ளே போனோம்னா ஹியர் வி ஹாவ் தி குளோபல் மார்க்கெட்ஸ். ஸோ திஸ் இஸ் ஹவ் இட் லுக்ஸ் லைக். நமக்கு 4 சார்ட்டிங் வியூ இருக்குது. இந்த சார்ட்டிங் வந்து விச் இஸ் பவர்ட் பை ட்ரேடிங் வியூ. நீங்கள் இங்கே போய்ட்டு உங்களோட சிம்பிள்ஸ் வந்துட்டு நீங்கள் பார்த்துக்கலாம். அண்ட் ஆல்சோ கிரிப்டோ ஃபியூச்சர்ஸ் போயிட்டீங்கன்னா திஸ் இஸ் ஹவு இட்ஸ் டேஷ்போர்ட் லுக்ஸ் லைக். அண்ட் இங்கே நோக்கில் போயிட்டீங்கன்னா கிரிப்டோ ஃபியூச்சர்ஸோட பேர்ஸ் எல்லாமே இங்கே இருக்குது. ஸோ அடுத்து கிரிப்டோ நீங்கள் டேரெக்டாக வந்து இங்கேருந்து பை பண்ணிக்கலாம் உங்களோட கார்டு யூஸ் பண்ணி, ஆர்எல்ஸ் நீங்கள் டேரெக்டாக இங்கேயே வந்துட்டு டெபாசிட் ஆர் ட்ரான்ஸ்ஃபர் வந்துட்டு நீங்கள் பண்ணிக்கலாம் உங்களோட மெயின் பேஜில் இருந்து. அண்ட் தேர் முக்கியமான ஃபியூச்சர் இஸ் தேர் காப்பி ட்ரேடிங் ஃபியூச்சர். இங்கே பல ட்ரேடர்ஸோட நல்ல ரெக்கார்ட் வச்சுருக்க ட்ரேடர்ஸோட இன்ஃபர்மேஷன் எல்லாமே இருக்கும். உங்களுக்கு பிடிச்ச ட்ரேடர்ஸை வந்துட்டு நீங்கள் டேரெக்டாக வந்துட்டு போய் ஃபாலோ பண்ணி ட்ரேட் பண்ணிக்கலாம். ஸோ ஒவ்வொருத்தருக்கும் வந்துட்டு ஒரு மினிமம் பேலன்ஸ் வந்துட்டு இருக்கும். ஸோ இவருக்கு வந்துட்டு $50 வந்துட்டு இருக்குது. நீங்கள் $50 பே பண்ணிட்டு அவங்களோட ரிட்டர்ன்ஸை வந்து நீங்கள் என்ஜாய் பண்ணலாம். அண்ட் ஆல்சோ தே கண்டக்ட் கான்டெக்ஸ்ட் இன் வீக்லி அண்ட் மந்த்லி பேசிஸ். அந்த கான்டெக்ஸ்ட்டில் ஜெயிக்கிறது மூலியமாக அவங்களுக்கு அவார்ட்ஸ் அண்ட் ரிவார்ட்ஸ் கிடைக்கிறதுக்கு நிறைய வாய்ப்பு இருக்குது. ஸோ திஸ் இஸ் Prime XBT.
So let's start. Okay, so this is a short disclaimer, as trading is risky and you could lose all your money. So do your own research, consult a financial advisor. Okay, this is not a financial advice. Everything, all this strategy, everything, whatever you are doing, you do in demo accounts, not with the real money. Okay. So that's a short disclaimer. So let's start with the today's agenda. Today we'll be discussing about understanding the turtle soups, and I will go briefly on understanding the ranges. Then we will learn how to anticipate the real breakout, because we have come across the turtle soup, right? But when do we anticipate the real breakout? That's the real breakout, and there I'm going to participate. Okay, so that's the important part of this lecture. And the last one is how do we backtest? Okay, the backtest, which you have seen everywhere, that people are going and trying the strategy, and they are getting 90% or 80% win rate. But at the end, when they try to execute on the live market, they fails to do so, because they are doing they are doing the backtesting the wrong way. So this is the right way. I will, like, this is how I do. So I will teach. No, I'm not talking about it's right or wrong, but this is how I do. Okay. So let's start. Let's start understanding turtle soup. So what actually turtle soup means is the fake breakout. Simple. It's a fancy name of fake breakout. So that is what turtle soup means. So in market, in market we have highs and lows. Okay, so this is a high, this is a low. So anytime these highs and lows will either have a fake breakout, or it will have the real breakout. So your job is to identify which high or which low is gonna have a fake breakout, or which is gonna have a real breakout. Okay, that's the important or the crucial part of understanding turtle soup. When you know that some high is going to have a fake breakout, at that time you will enter, you will expect reversal. But when you know that some high is going to have the real breakout, or low which are going to have a real breakout, then in that case you'll have continuation trade. Okay, so generally turtle soups can be of 3 types, which we can divide it. One turtle soup is the reversal. Okay, which again will be the continuation turtle soup. Okay, this is the continuation turtle soup. The next one will be against the trend. Okay, so this was the against the trend, as the trend was up. So this is also a type of turtle soup. So there can have 3 types of turtle soup, but let's focus on the only the turtle soups. You can apply all these concepts, any types you used to have. Okay, so before understanding where we can anticipate turtle soup, the first thing you should know is understanding the order flow. So order flow is very important when it comes to understand turtle soups. Okay, so there are three methods which I personally use to identify order flow. Okay, there are three methods which I personally use to identify the order flow, and the first method will be I'll be using intermediate term highs and lows. Okay, intermediate term highs and lows, that is ITs and ITL, which ICD taught in 2022 methods, but that's the different. But I use it in the different way. Okay, that is intermediate term highs and intermediate term lows. Second method will be I'll be using PDRS to understand which high the order flow. Right, I'll be using PDRS to identify the order, understand the order flow. And the third method which I will use, the which high and lows is getting rejected, which high and lows getting rejected. Okay, so rejected, first of all let me clear what I actually mean by rejected. Rejected means fails to expand above highs and below lows. Again I am repeating the sentence. Rejected means fails to expand below lows. So it fails to expand below lows, or it fails to expand above highs. Okay, that is what I actually mean by rejection. Okay, it fails to expand below lows or above highs. So that is what I mean by rejecting highs and lows. So let's use the one of the method. Okay, the intermediate term highs and lows, or I can use all these three methods, but let's use one of the methods. Okay, to identify the order flow. So see, so look, in this whole down move, let me explain this whole move, then you'll get the idea. Okay, so here we can see in the whole the down in this whole down move, we saw that price was rejecting highs. Okay, it was rejecting highs and it was breaking lows. Okay, and when it was breaking lows, it is creating a fair value gap. And also look here, again it got rejected here. Okay, and it created a fair value gap here. Okay, and the high which is formed, look, how do I, first of all let me introduce what I actually mean by intermediate term highs and lows. So this ITs and ITL, how do I define it? So there's a fair value gap. There's a fair value gap. When price rebalances this fair value gap, price come and rebalances this fair value gap. Okay, and it breaks the structure like this. It breaks the structure. So the highest high will be my intermediate term high. So unless until this high is got broken, I'll until then my order flow will remain bearish. Okay, so now you see here there is a fair value gap here. There is two highs. This is one high. This is one high. Okay, but how do I confirm which high is my intermediate term high? Unless until here price broke this low means it got closed. It closed below. So that is broken. Okay, so it broke this lows. So then I will confirm this intermediate term high as my strong high, and this confirms the order flow. The order flow is now bearish. Okay, again you saw there again the price created a fair value gap. Again price created a fair value gap, and again you saw the high is getting rejected. This high got rejected. So the order flow still remains bearish. So this is how we'll be using. The high is getting rejected, low is getting broken, high is getting rejected, and low is getting broken. So this confirms the order flow is bearish. Okay, this confirms the order flow is bearish. So, and also if you will see, you see the down price is price respecting the bearish PDRA, and this respecting the bullish one. You see, if this down close candle was supposed to be an order block, but price fails to support this order block. Again, this down close candle can be an order block, but this fails to do so. Okay, so here you saw that this bullish order block price did not respect it, but here price is respecting the bearish fair value gap. So the intermediate term highs and lows, rejected highs and lows, and also the PDRA is confirming me that the order flow is bearish. So we'll always be looking to trade in the direction of the order flow, not against of it. Okay, so now the most important part is before trading a turtle soup is identifying the order flow. Because when you anticipate the order flow in the wrong manner, then you'll be wrecked multiple times. Okay, before getting correct. Okay, so this is how you will do. You'll be using intermediate term highs and lows. You'll be using PDRAs, and you'll be using highs and lows which is getting rejected and which is getting broken. So after identifying this whole move, now identifying the order flow, now there's one important point you always keep in mind. This is the sauce. Okay, this is the sauce. That lower time frame structure, lower time frame structure shift is less relevant than higher time frame PDRA. Okay. Now I will explain this whole point with the help of an example, and this is the source where no this is actually will help you to trade data set. Okay, so lower time frame structure shift is less relevant than the higher time frame PDRA. Now I will what I will do, I will remove all those drawings and then I will explain. Let me keep in mind this whole thing. Let me copy this and I will post this somewhere else so that I will be using. Okay, now come back to Euro USD and now let me remove all the drawings. Okay, so now what we can do now, I'll using that this sentence and I'll explaining that will help. Lower time frame structure shift. Okay, lower time frame market structure shift is less relevant than higher time higher higher time frame PD arrays. Okay, now the whole trade which I took, okay, here I'll be explaining right now. uh, Again I have to go here, just a sec, there is a error. Okay, now come here, let's go to monthly chart. Okay, so what do you have here? What do you have here? There is a fair value gap here. Okay, this is a monthly, this is a monthly fair value gap. Okay, this process will apply in every PD array you see. Okay, this is a monthly fair value gap. So now let's come back to the daily. That would be good. Okay, daily you saw what, that the order flow is bearish. How do you know the order flow is bearish? That price is rejecting highs, getting intermediate term highs here, there's intermediate term highs here, breaking lows, and also creating a fair value gap here. This is also intermediate term high. So my idea is that the order flow is bearish, but when price tapped this monthly PD array, as the order flow in daily is bearish, so at this monthly PD array I will be neutral because I don't know whether price will reverse from here or not. I have to see in daily time frame whether it's happening or not. Okay, so now let's see. So here keep in mind, always focus here, this lower time frame market shift is less relevant than the higher time frame PD array. Okay, now see the next candle. Now what did you saw? You saw that the next candle closed below it. It looks awesome, right? It looks that we are moving down, the order flow is bearish, and it's ideal to take trade in the in the short. Ideal to take the short trade. But this, as we are in the monthly PD array and the order flow in daily is bearish, so what will you do? We will be neutral. We will be absolutely neutral. We will do nothing here. We will expect, because here this and lower time frame market, this is a lower time frame structure shift, as it's a daily, so this is a daily structure shift, but we are at the higher time frame PD array, which is a week, which is a monthly PD array. This is a monthly PD array and the structure shift is daily, so this is not that important than this monthly PD array. This is important. Okay, now what we can do, we will wait here and we will wait for price to disrespect a bearish PD array. Okay, so let's wait. Now what did we saw, that there is a fair value gap here, that's a bearish fair value gap. So in order to show me bullishness from here, I would expect that this fair value gap price should not respect here, it should disrespect immediately. So the next candle, what did you saw, that price closed above it. So the moment you saw the price closed above it, okay, so considering this candle is my range, as candle is a range, you know, so considering this candle is a range, the obvious target would be this high. Okay, now that's my trade. So here I will expect a turtle soup, because I'm not and not, or do not try to catch tops in bottom, please. This is bottom, but don't try to catch this. Okay, now you expect a turtle soup inside this fair value gap, and you will target this high. Okay, now let's come back to the 4 hour. As daily to 4 hour, it's a time frame alignment. Now come to the 4 hour. Okay, you can clearly see there is a fair value gap here. Okay, there is a fair value gap here. We got the change in state of delivery. The delivery has changed now, and this is a fair value gap we have. This is a fair value gap we have. So what we can expect now, again you see there is a intermediate term high and low here. You can use, this is very very crucial, man. If you not use this, let me, this is, there is a intermediate term low here. Okay, I'm talking about this. This is intermediate term low. So the price to remain bullish, to target this high. Okay, to target this high, what I will expect, this is my invalidation. My price will not close or come here. Okay, so what I will expect, the price to tap this fair value gap. Okay, the more aggressively it taps, better it is. Keep in mind, the more aggressively price taps it, not slow and steady. Look, so not come like this, not like this. It's sudden move. That makes it a good one. Okay, now you can see what happened to the next candle. It is consolidated. That is good. Some of the tips you can take the main takeaways here: consolidation above fair value gap makes that fair value gap a high probability one. So you see here that there is a consolidation just above the fair value gap. So that is, it is now this probability, now this fair value gap is going to be high probability. Okay, and this is gonna be make or break for our trade. Now again see, there is again consolidation. Now this is very very important. The moment you saw the price is coming so aggressively, do not get scared. Okay, you should stick to your bias until it is proven otherwise. Okay, now the moment comes here, price, let's go to the lower time frame to see much more clearly. Okay, so it tapped here, you can take the entry directly inside the fair value gap and you will target this highs. So that's the turtle soup. Look here, this is the turtle soup. This is the turtle soup. It's pretty easy. Okay, first identify this range. This becomes my range. This whole candle is a range. Okay, this is my invalidation point. Price came, and now you can go to lower time frame to look for change in set of delivery. You can do so. Okay, how do you know? Let me use 15-minute candles. Okay, again, there we go. No, again there is no close. Yes, we got closed. Okay, see, this is how you can do. The moment you saw that price closed above this, that's confirmation. Price closed above it, this bearish candle, so that's your entry. You can take an entry here. That's a confirmation. There is no harm to take entry here and target this high. The obvious stop loss, the best stop loss would be this low, and the riskier one would be this low. Okay, so now that's a pretty damn easy trade you can take. There is no need to. Okay, first target, you will target this high, and again the high, the much more bigger target was this high. Okay, so the rest is history now. What has happened, because this is not hindsight, I have already shared this chart in my Telegram channel. Okay, now you see what happened. Price expanded, and we have reached our target. You have to wait, man. You do not have to see that whether it, let me make it fast. 10. Okay. It's a 1 hour chart. Let me go to 4 hour, so that yes, now it's good. Now I'll also explain one more thing here. Yes, we got target got hit. Okay, but I entered here directly here. I do not wait for the confirmation because I was damn sure about it. Maybe here at this point. So my entry was here. My stop loss was here. Okay, because I have seen this multiple times, so I have confidence. but you guys don't do that. You see 100 times, then you try this. Okay, but you wait for the confirmation. Now the next important part is, this is how you do. This is how you plan all your trades. Identify the high time frame PDRA, high time frame key level. Okay. Then identify having the bias. This gives me the bias. Okay. This is how you will form a daily bias. Not every day you will have a daily bias, but few days the bias will be obvious. It's obvious right now. Now there's one more thing. Let's go to daily, and there's some interesting stuff here. Look, this candle can also be considered as a range. These two candle can also consider as a range. There is a way where you can identify. Look for high volume candles. Look for high volume and inside candles. Okay. So you see these two candle is a high volume, and also we have multiple candles, 1, 2, 3, 4, 5. So this is inside of this candle, or in both inside this both these candles. That is a range. So consider this as a range. So the obvious target would be this candle high. Okay, this rejection block. Okay, and the mean threshold of this range. Mean threshold would be this high. So there are multiple targets you can target. That's a good swing trade to have. You can have multiple swing trades inside multiple short term trades inside these whole swing trades. Okay, now I will let you know how do you do that. Okay, now you see here. Let me remove these lines, then that would be easy to make you understand. Okay, so these are the few points should keep in mind. Then one more important point again. Okay, that's a source. This is source. There is one more source again. Look here. I do not take any random candles as my order block. Okay, not all these candles you see here is my order block. I choose a specific. I have 5 high probability order blocks, but I will be only revealing only one today here. So that's the one. Like I have many, but I will be revealing only one. But that works very good. Okay, so this is my high probability order block. Why? Because the source is here. Focus on the candle which rebalances a fair value gap, and I will also explain the reason why. So this black candle rebalances this fair value gap, so that makes this candle a high probability order block. Why this is a high probability order? Because whenever you see this fair value gap got rebalances and price causes the change in state of delivery, then this low is my intermediate term low. So intermediate term highs and lows are the strong highs and lows in the market. Okay, so that's why this is a strong or a highest probability order block. Now, so the opening price is the important. The opening price of the order block is the focus point here. So at this opening price, I will be again anticipating a turtle soup. Okay, this is the key level. Now this becomes my key level. This becomes my key level. Okay, so at this opening price, I will be expecting a turtle soup. Let me make this short and make this at the top. Okay, so at this key level, I will be anticipating turtle soup. So as this is 4-hour chart, so I can go to 15 minutes or 1 hour to look for turtle soup. Okay, let's go to 1 hour. So I will expect when price come back again. The price has not formed the order book yet. Now see, let it come here. Okay, now you see, came back to the key level. This is the low we have. So this low can be turtle soup. The low can be turtle soup. This is the high probability turtle soup, and this is also intermediate term low. So this intermediate term low is inside this, and also there is one more here. This fair value gap is also high probability one because it forms inside a higher time frame order block. This is a higher time frame 4-hour order block. That is why the lower time frame fair value gap inside that order block is a high probability one. Okay, so now you see. So this is high probability one. So what I can expect? one, I took trade one here. I took some partial here. Okay, I'm still holding my trade till here and also to the longer target. But again, I'll be pyramiding the entry here, keeping the stop loss at break even with the first trade. Okay, so now see what has happened. Price did the turtle soup. Okay, always expect a V shape, not M shape. No, there can be a V shape turtle soup, or there can be a M shape turtle soup. Okay, so expect this. So here we got M shape. So do not put this is called a break even move. When you put the stop loss at break even, this happens. You don't put the immediately stop loss at break even. There is a logical point. You do not try to move your stop loss immediately. If you move the stop loss, then you will get stop loss and the price will move in your favor. So do not do that. Okay, never. Stop loss, ideal stop loss will be this candle. Okay. So now let's see. Now the rest is history. Again, this is again one more turtle soup. Okay. Now go to the higher time frame, 4 hour. And then now let's go to the daily. Again, I will show you something. Daily, what did you saw? Daily, what did you saw? That this price closed above this candle. So this candle becomes my order block. Okay. Now this becomes my key level. My target is still this rejection block and then this high. Okay. So again, I'll be pyramiding my entry, taking partials here. That's my order block. Okay. So I'll be anticipating some turtle soup here inside this key level. Okay. Now let's go to the time frame, 1 hour, or let's stick to the 4 hour. Okay. Okay. Gorgeous. Now you guys can if you look at the chart very carefully, you'll have some interesting stuff here. Okay. You look, and I will let you know in a moment, but this is my high priority fair gap. Okay. So I'll be expecting this fair value gap to happen also. Okay. So let's see. And what makes this a fair value gap a high priority one? Let's see whether there is a consolidation above high or not. Okay. Yes, there is a consolidation. You can see here. Okay. So the moment it came very it came like so aggressively that you will get scared. Okay. And then that's the high priority model. Like this is the model. This is the model. And the model is this is also one model. This is the intermediate term low. Okay, of 1 hour chart. But the 4 hour chart, in 4 hour chart, the fair value gap is not rebalanced yet. So that's the turtle soup, man. That's the turtle. That's the high priority one. It has, I will say, 80 to 90% win rate, man. But it has very rare to see, but it has high win rate. Okay, now you see, price tap. This is my entry. You will take entry here, and this entry is still on. This is on. Okay, targeting this high. But this is where you can anticipate turtle soup. 50% of this range inside the high priority fair value gap, inside a daily key level. Daily. There's a daily fair value gap here. Let me remove all the drawings, this brush, so that it will be clearly visible. Just a sec. Just a minute. Okay. Yes, there are so many brushes. Okay, now come back to the topic. Here, this is my high probability order block and also a high probability fair value gap. It's not this. I'm not talking hindsight, guys. It's everything has been called earlier in the in Telegram group. Okay, now you see this is a turtle soup. Okay, and again I will target this high, the low, the high that causes the turtle soup will be targeted first. This one, so this will be targeted first. Now target this. Okay, gorgeous. Okay, so you got the moment price tap the rejection block, that's your trade. Should not expect certainty in market. Like this was supposed to be target, but this is a rejection block. So still you should be out here. 90% of the trade should be out here. Holding 10% to target this, but this is how you do. This is how you do. Keeping in mind this point, keeping in mind all these points make sense. Okay, and these all are true breakouts. You guys know what's a false breakout, but you should also know what true breakouts looks like. True breakout, a true breakout. Let me explain the real breakout because I have explained turtle soup briefly, but let me explain the real breakout. The real breakout, where you see, how do you know that's a real breakout? When price closes above highs and below lows, leaving a PD array behind. Okay, so this is a sauce. One more sauce. Now you see. Repeat this sentence. When price closes above highs. So I was saying that this was my high probability fair value gap, but the reason is I'm explaining right now. Okay, so this price closed above this high, closed above this high, and it created this PD array that is a fair value gap. That it is a fair value gap. Price created a PD array which is a fair value gap at the high. Price created a fair value gap at the high, and we don't have only one close. We have multiple closing. There are multiple closing above the high. Price creating a PD array at the high. That's a signature of a real breakout. That's a signature of a real breakout. That's a real breakout. And this PDR is a high probability one because it forms at the high. Okay. So that's the reason. That is the reason. Now again, you see here, um, every time you see fair value gap get formed, uh, that makes sense. That is how I anticipated this move as well. Um, price this price close above it, multiple closing. So the fair value gap formed at the high is a high probability one. Anticipate turtle soup here. Okay. Same goes to here as well. Price closed below fair value gap, anticipate turtle soup here. That's a real breakout. These all are the real breakouts. Closed fair value gap or PD array. Not fair value gap, you can have PD order block as well. So closed, multiple close, PD array, that's a real breakout. Okay. Okay. So now let me go to the today's agenda again. What is left right now? I have posted this. Let me post again here. So this was I was supposed to explain today. So I have taught you how to anticipate real breakouts. It's briefly, but there's so much to know. But that's enough. And understanding the ranges, understanding real soup, you guys know how to backtest. Okay, so I'll use a simple model, and I will explain how you guys can backtest that simple model, or how you guys like simply how you guys any model backtest any model. Okay, let's do that. So the model is, let's go to the Euro USD chart. The model is, or let's go to any chart you wish. Let's go to the US all, the or one which I've never traded. So let me remove this pair and okay, explain. This is gonna be good. Okay, just a sec. There's an issue in trading view. Again, I will go to US oil and I'll go to daily chart. I saw something interesting here which might help you. Let's go to here. Okay, now all good. The model is simple model. You can also trade. That's one of my model. An order block, a high probability order block, not a random order block. High probability order block. This is a wick. Mark this opening price. Okay, wait for price to come back. Okay, and anticipate a turtle soup here. Target the high. Okay, that's a good one. That's the best model. Simple, no complication, no time, nothing. Now you see, that's the order block. Open this. Okay. Now how do you backtest any model? Okay, that's a simple model I'm explaining, but how do you backtest? First thing you should keep in mind: do not go and randomly look for RR and all those nonsense. Okay. First of all, what you will do? This is a daily key level, so you should have keep in your mind the timings as well. How do you go with the timings? Okay. And first of all, you keep on check. You know what will I do? What will I do if price taps this favorable gap? Okay. Not favorable gap. The key level. What will I do? What will I do? This is the first question you'll ask to yourself. What will I do when price hits this key level? Okay. And again, if it hits violently, then what will I do? Okay. These all are the questions you'll ask to yourself when you start backtesting. Okay. This is how you'll do. Now let's go to the 1 hour. Okay. And that is my key level. Okay, that's my key level. You see there's a favorable gap right above here. So this is supposed to remain unfilled. And again, one more sauce. Higher time frame PD array. Higher time frame PD array will not allow lower time frame gaps to get filled. Okay, so as there is a higher time frame PD array, this is a key level. Okay, this is a daily order block. This 4 hour favorable gap should not get filled. It's ideal it should not get filled. Okay, so this is how you think. This is a favorable gap. This should not get filled. And what will I do if price tap this key level? That's the one important thing. And where will I put my stop loss? Okay, and what will be my emotions when I will execute? Okay, where would I will take partials? When I will take my where will I put my stop loss? Like when I put my stop loss at break even. Okay, when I will be confident enough to hold the trade. Okay, these all are the questions you will be asking to yourself. Okay, so not do not go for RRI, nothing. Just ask few questions to yourself whenever you start doing backtesting. So first thing is that what will I do when price tap this key level? Simple as so I will take a trade. So where will I put my stop loss? So the ideal stop loss would be above this breakout would be ideal. I guess this is the safest stop loss, or the riskier one would be this. Okay. So these questions got answered. So next question is let's see. Let's wait for price to get tapped. Okay. Okay, price tapped here. Shall I enter directly or shall I wait for the confirmation? Okay, you should ask here. So it's up to you. Either you take entry directly here at the key level, short position here. Okay, and putting the stop loss here. Obviously breaker high and targeting, taking 2R or these lows, to these lows. Okay, but how will I be confident enough to hold the trade so longer? You know, how will you be confident enough to hold the trade so longer? Okay, so this all are the questions you'll be asking. When will I take my partials? So the answer will be I will take my partials here. Okay, here this lows will be taking some 10% off. So you will keep in mind this. And what will be your emotion? Okay, so next thing, price. It immediately came back, but it should not do. I would have explained more points. Okay. So this is how you will ask. There are few questions you should ask to yourself whenever you try to backtest. Okay. Again, how do I confident enough to hold the trade? Now again see here. Confident enough. How? Price close below it. This low. So if price remains below this low and it has multiple closing here, and it created this favorable gap, so this is how we'll do. This is how I'll do. Okay, this is my favorable gap. Price close below it. There are multiple closing here. So what will I do? I will, this is how I will be confident enough to hold my trade, because that's a real breakout. I just now explained you what's a real breakout is. So that is a real breakout. That, so I'll be holding my trade here till this, because that's a real breakout. Now see what happened. Mm, Price came back, tapped this level gap. I'm no hurry to close my trade. Okay, and again you see price closed, break this low, get at a favorable gap. That makes sense. Still I'll be holding the trade. Okay, and again price tap this favorable gap. This is a spike, should not get you know, uh, there we go, the target got hit. This is how you'll do. This is how you will do. You keep on checking the order flow, you keep on checking the where keep on checking where you do take the partials. When now again same questions, when I will put my stop loss at break even. So here that's a logic, that's a logical point. When price broke the low, there is multiple closing here. There is no, it doesn't make sense to price again come back and tap my entry. In that case I will put my stop loss at break even here. Right, so these all are the questions you'll be asking to yourself. Let me explain one more time using any pair would you wish to know. Let's use Nasdaq, any pair, but there's a trade which I took, so I'll be explaining that one. That's here. Maybe it was here, I guess. Not here. Let's go to 4 hour. Okay. Let's go to 4 hour. It was on. Okay, that's the trade. That's the trade. Yes, let's go to daily first. And is it in Nasdaq or US and US 500? Let's go to US 500. I guess that's a US 500. Let's go to 4 hour. Okay, let's go to daily to see the order block which I'm looking for. Again, you can see this. That's a good order block to have. So you can mark this as a key level. Okay, that's your key level, and remove this. Okay, let's go to 1 hour. So what will you expect? That price to tap, price to two totals up here. Okay, nothing fancy, nothing. Okay, this is magic. Price came and tap immediately, but I was supposed to explain a good example where there was a good turtle soup. Hold on for a few minutes. I will be, let me see which pair, which I could not remember the name. It either US 500 or US 100. Maybe US 100 it was. Let's go to daily. Okay, daily this. Okay, there we go. You can mark this as an order block. Or there was a weekly order block, I guess. No, there was no weekly order block. So check to daily or 4 hour you used to have. Gorgeous. So there was a 4 hour. There was a 4 hour. There was a daily order block here. Okay, so there was daily order block here. So what do you wish here? The price to respect this order, but that's a random order block. I will not trade this. I could not remember the pair. Let's check any other pair. Let's go to gold. Let's, yeah, this trade. This is gorgeous. This one I did not took, but this was a good one. I was anticipating this. Okay, price took out this high. Okay, and there was an order block. When price closed below this low, okay, and price closed below this low, so this becomes an order block, and that's a key level. Okay, so this is a key level, and here I will anticipate turtle soup. Turtle soup. Here I'll anticipate turtle soup. Now let's go to the 4 hour. Simple as that. 1 hour. Now you'll ask many questions. Okay, this is a key level. This was my key level. Let me write it down so that it will be easy for you. Key level. That's my key level here. And but so one more question. So when price tap this key level, so where will I put my stop loss? So just where I put my stop loss above the breaker. So this down close candle before this side. This is my breaker. So I'll put my stop loss at break even. First question answered. So if price tap this key level, I'll be expecting this high to be taken out. Okay. Then I will anticipate these lows to go down. Okay. So let's see what has happened when price tap this key level. Okay. So let's see. Let's okay, and it should do violently, not this way. This small candles, one violent candle, like it should looks like it is breaking out. Okay, that way. That this is how it's a violent candle. Okay, so what will you do? You'll ask multiple questions here. Okay, if price, this is where I will take my entry, and so where will I take my partials? So the low, you can take partials at these lows or these lows. Okay, and where will I put my stop loss at break even? When I see price here at a favorable gap. Okay, then only I will put my stop loss at break even. Or if price disrespect this 4 hour favorable gap, then at that moment of time I'll put my stop loss at break even. Okay, so there we go. Here I will put my stop loss at break even. I entered here. Okay, and when price close below it, so that's there. I will take partials. I will put my stop loss break even, and I will allow price to run. Look here, turtle soup happened. Here turtle soup happened. I will enter here. Okay, and I will target these lows, and these lows as well. But I'll keep on taking partials. Okay, and you look. This is obvious. Like you did not get stopped out because you put stop loss not without logic, with logic, not without logic, randomly with fear. You do not put the stop loss at break even, because there will have a break even move. Okay, that's your key level, that's your expansion. Then trade is over. Now you don't go and look for more trades. Wait for PDRA to form. Wait for high time frame to show me the bias. Okay, always never try to. There's one more thing what people does. They try to predict. They try to predict the candles. They try to predict 10 candles, 20 candles at a time. Don't do that. Okay, you need to know the model. What actually model means, right? Model means trading model means simple. There is a point A, okay, and there is a point B. Okay, so there is a high probability that price will move from point A to point B. So that is my model. After that, what price does doesn't matter to me. Okay, you should not be scared, you should not be worried what price does after that. Okay, so the model is that I know, I have seen, I have backtested multiple times that there is a high probability that the price will reach or it will move from this point A to this point B. So I will bet my money here. Okay, and I will target this point B, and that is your model. Okay, that is your model. After that, what price does, you should not be worried about that. Okay, so that is all from my side. Okay, and let's see how many have you have some questions or not. Let's see. I will ask Dr. Matrix to turn on their matrix, and if you guys have any questions, they can send text messages right now. I have turned on the text messages. Let's go. Okay, I'm waiting because I have said a lot. I mean, a lot. If you go and backtest this, like you don't need nothing. Like you need nothing. I'm damn sure you guys are going and watching some bullshit quarterly theory and so many subs. It doesn't require. All you need is a PDRS and some highs and lows. That's all. Okay. But if you know how to do that, that makes sense. Else, do not follow everyone you see on Twitter and YouTube.
Hi, brother.
Uh,
I have a question.
yeah, you go and text there, na? Huh? That will
Yeah,
be
okay,
good
sir. Okay, sir.
because if you know if everyone start opening their mic, then that will be difficult for me to. You know? But people don't do that, right? You know. Mhm. Uh, yeah. Mm. Someone is saying you talk like Romeo, dude. Okay. Uh,
Can you go please into Euro USD chart?
mm, just a sec.
You
Yes.
you mark a OB in a daily chart.
Right. Let's go to Euro
Uh,
USD.
you
Mm.
mark a daily chart, daily OB.
Yeah. Let me remove all the drawings. Go ahead. Hmm. I marked the daily OB.
Yep.
Yep.
Can you mark
Tell me.
that?
This one I marked.
You only mark wick. Why you do only mark wick? Not
Okay.
that close candle, close body.
Yeah. Because order block is not a area. You know, order block doesn't mean a area. Order block means there is a three price level in order block which is important. Three price level. Okay. First one is the opening. Second one is the high, and the third one is the mean threshold. So this is the key level, which I actually mean. Key level means it's a level. It's not a area. That is why I always expect the opening price to have reaction, and some case if price is extremely bullish, so this high should react, and when price and and sometimes when price is sluggish, when price taps this order block is not at the right time, then I expect price to go deep down and to use this mean threshold to anticipate continuation of the trade. Okay, so these three price level, not a whole order block. This you do not mark order block like this. This is wrong. Okay, use this key level. That's why I do not. I always mark in this way. Sometimes this way or this way. Uh, that's all I need. This price line is important.
Yeah,
Nothing else.
that's how I mark. So I never use
So
wicks.
always
That's why I'm
this
asking.
is important. Opening price and closing price is important. Okay, so how does it is important? I will let you know. See, this is this is opening price. That's an order block. Okay, and this is a closing price. That's the rejection block. Okay, so this is important. That is why this works. That is why this works, because this is the opening price. This is a closing price. Okay, so opening price simply means order block. Closing price simply means rejection block. Okay, there we go. Next question. Okay, gold 1 hour. Yeah, and this one. Right. That's it. Yeah, right. That's opening price. Okay, it's busy. Right. Yeah, yeah. Sometimes when price is extremely bullish, it does that. This. Hmm. Look, bro. Look. If you guys are confused, nah, one you can do. Always mark the order block which take out the liquidity. Okay. So this candle take out the liquidity. So that's my order block. Uh, that's one more source. And but this is the entry. If you miss that, bro, or you could have taken the in 4 hour. Hmm. It's okay. You should have told me the bro. I was not looking the chart. It was easy to chewer, man. No, no. Oh, you took the stop loss was here. Okay. Anyway, that's good learning. Right. Right. Okay. Let's. Where does to place correct stop loss in our order block? Order block. Always put a stop loss below this. Look, there are many ways. Okay, I will go briefly on that. There are multiple ways to put stop loss. The first one is use search candle. If you don't know what is search candle, go and search on YouTube. And second one is put below order block. Sorry, not order block. Breaker block. Okay. The third one is the candle that created a fair value gap. Suppose you see this candle created a fair value gap. No, second one. Second one created the fair value gap. So this is the risky stop loss. Okay. The easier one will be the below the order block, safest one, and the more safest one will be the first candle, and the more safest one would be below the what do I say breaker block. So this might be this up close candle into a breaker block. So this is my stop loss. So I have explained 4 to 5 ways. Rewind this video again, watch that. Next.
Yeah.
Also,
Uh,
can you, Vikas, sir, can you also explain how deep the price can go? Sometimes inside an OB, sometimes it just taps, and sometimes it goes inside.
that's very tricky, to and identify how price can go deeply. But to be frank, when price hits the key level at the right time, it will immediately react. But when you see price tapping the key level during any odd time, like in CBDR range or in Asian range, so sometimes doesn't react. So in that case, price can go deeply. But most of the time, you expect price to react from the opening price only. But expect price to go at least to mean threshold. So you put your stop loss in such a way that even if your price goes to the mean threshold, you will not get stopped out. Right? That's also an ideal way to put. But there is I just explained 4 to 5 pages. You guys can take any one way and it works. It's okay. What works for you, it doesn't mean that it will work for everyone. But everyone must know that what works for them. Hmm. Next one,
Yeah, hello.
guys. If you have
Yeah,
any,
hello.
yes, Raja.
Yeah, I have a basic question regarding the both of you, Dr. Matrix and Vikas also.
Yeah,
I'm basically trading in Indian markets. Okay,
right.
so I'm new to IC concept and also
Mm-hmm.
the SMT. So if this price action is works till now, or we have to move to for the following trends, SMT concept or ICT.
But no, it's the best way to make money. Yeah, yeah.
Okay.
But there is a easier way to understand. Uh, learn. You know all the candlesticks patterns. You know all the normal patterns which happen in Indian market. Okay. So what you can
Yeah.
do, master all the PDRs. Okay, and
Okay.
you expect that pattern to form at that PDRA. So that patterns becomes the high probability. Yeah. Now I'll explain right away. Okay, if you have time, I
Sure,
will
sure,
explain
sure,
the
sure, sure, sure.
you that's just yeah, you can have any let's go to H1. That's now you know you have you guys said multiple patterns. Okay, so any patterns you see here, let's go to 5 minutes if I can go. Okay, so there is a M pattern, If I can see, this is M. Okay,
Yeah, double
this is
bottom,
M,
double header.
double bottom, right? So this double bottom is forming where? At the order block, at the key level. So that order, that is why this order block, that is why this worked. That is why this M pattern worked. Okay, so apply all the patterns you have. Apply all the, you have head and shoulder, you have Moru Bozu candles, you have Doji, you have everything.
Chapanda.
Like, right, this is how I do. This is one more source because I also apply these concepts to I do not apply all ICD concepts. You know, I take concepts from Tom Dante. I took concepts from some of the more traders. So I also use this this. Again, yeah. You just help me one more point. Again, you see here. If you see the trend line, no, bro. You see here. This is a trend line, right? Huh? This is a trend line breakout. Where it is happening? It's happening at the key level, so that makes sense to take
Yeah.
entry. Yes, but this is you can't predict. Yeah, no. I'm agree with you. This whole thing you were telling me, it's a trend line. Okay, this right? Okay, anyway, but you know what? Why I do not use its concepts randomly because you mark the trend line, I mark the trend line, but it will not be same. But if I mark the Fibonacci gap, you mark the Fibonacci gap, it will be same. Okay, so the best way to learn is to apply all the concepts you have learned so far at the higher time frame PDRS. Okay, that is the answer from me.
No. I'm just curious about the ICT concept because in ICT people, some people are trading in 3 minute or 1 minute chart, but in Indian markets, uh,
Okay, Dinesh, let's go to the next question, right? We have so many questions. Mm.
sure.
Uh, can you? Okay, so I hope there is no relevant questions here. Uh, right. Yeah. So you can go there and you can search. At least you guys should do some work, right? Uh, mm, mm. Okay. At least I guess there is no questions. So right. I will have my snacks. So. Uh, uh, in continuation, consolidate and FBZ at total entry is good. Consolidation, reduction, expansion. How to see in reversal? Simple, bro. You do one thing. This is key level. This is your turtle soup. Do not do this. This is reversal. This is thread this. Okay. This is your OT. This is OT. So what you can do? This is expansion number one. And this is source. One more source. First expansion. You see second expansion. So first and second expansion must every time they are equal. First and second expansion. So trade this start also. Leave this because you will get multiple times to catch this. But here you know the price hit at this low. So at least price should not go below this low. So that's how you do. Mm, yes, we are not responsible. Right. Okay. There is no valid question. But that's the way, bro. I do not enter it directly at it also. CSD is important. Not always, but sometimes. Hmm.
Bro, can you give an overview of that order box?
Bro, it's recorded. You will have the recording.
Okay.
Bro, give me the recording, eh? Hmm. Okay, so I guess the lecture is over. I have answered all the valid questions, and it was great time.
Last one question.
Yeah, go ahead.
Bro, which one
Bro,
is
what is
good?
the best psychology tip which
Wait.
you give while anticipating?
Okay. I will give you one best psychology. Okay, see, this is how you do. This is if you're taking long, right? Okay.
Yes.
What do? You enter here. Okay. You know that I will take. You know that you take partials here. Okay. And you know that the stop loss is here. And you know that your target is here. And you also know that where will you put your stop loss break even. So after entering, put alert here, put alert here, and put alert here. Whenever alert goes, you look into the chart. Right? That's the best way. And I suggest one more video. Go and search. Okay, go and search in YouTube. uh, Tom Dante as well as Mark Douglas study psychology video, which is 1 hour, and I'll also send in my Telegram channel. Don't worry. And Dinesh, you know one thing. People think that psychology develop in one day. You watch a video, it develops. No, it's a gradual process. That's psychological tip, but people think that if I watch a video and the next day I will be good at psychology, but that doesn't work. Okay, it is how you have to practice. This doesn't come easy. You have to practice. You have to do the right thing today, the next day, for the next week, for the next month, and after a few months, you will see that you have now changes. You are now good at psychology. Okay, so I will give you the links, man. I will give you the links of those videos which I'm sharing in Telegram channel. Don't worry. Okay.
Bro, which one would be the best, bro? The breaker or the order block?
That
Look,
depends on
there are
you.
four.
That depends on you. Like you'll have
No.
to experience it with yourself, bro. That thing.
Joseph, you know, the simple answer will be try all and do what works best for you. Apply what works best for you. Right?
Okay, bro. Okay.
Okay then.
Yeah. Hi, bro.
Hello,
Yes, bro.
Hello. Yeah,
Hmm.
I have one question, bro.
Yeah, go ahead.
If price breaking high aggressively, it creating multiple FPGs, bro. From those, which FPG we
Okay,
can
I
take,
just
bro?
told you, bro. Just focus on the Fairvalley gap, which is created at the high, right?
Okay.
Not all the Fairvalley gaps
Even
at the
lower
highs.
time frame, even at the lower time frame, just mark the line where we had previous buy stops or sell stops, and just
Okay.
drag them to the right side of the chart. Where you see and fair value gap aligns with that thing, just enter or there, or else when you go to higher time frame, you will have a big FEG, the single FEG. No, just wait for price
Yeah,
to
yes,
get
bro.
into that, then again wait for price to like create an intermediate term low or high, and then engage. Maybe that formation of entering posts and intermediate high or low formation, no, your
Yes, bro.
probability will be higher. Simple thing
Eh,
works,
Okay,
bro.
okay, sure, bro.
Like very simple thing work.
Actually,
Okay.
I watched some videos. They told like place entry in 50% of
Yeah,
FPG.
50% is a
That.
good level. Like that is same discussed in order block. No, mean threshold is important level. But every
Ah,
time
yes,
price
yes,
need
yes,
not
yes,
come
bro.
down to 50% of an OB. Like 50% is an important level. When we have like a
Mm-hmm.
BPR aligning with an FEG, we'll have an institutional order flow entry drill. So we'll not expect to price to come below or above that the consequent encroachment, like 50% of
Okay,
the
okay, bro.
FEG.
Okay, okay, bro. Thanks, bro. Thanks, bro.
Yeah.
Matrix, bro.
Oh,
Yeah, bro.
Vikash, bro. Start
yeah.
back
Go.
your lessons classes, bro. It was very useful.
Sorry.
Sorry, bro.
Start back to post your lesson classes. The
No,
mentorship
Yeah.
classes.
it's done, bro.
YouTube.
It's done. It's done. It's done. That's it.
Is there any other videos? Or is it?
That's more than enough. That's more than enough. That's done. Just I'm like you can, if you want to learn, you can just learn the 19 videos and go through my trade breakdown content, and that is more than enough, bro. You need not
Is
like
there,
sorry.
bro? Is there any mentorships? Are you
No,
running any mentorship?
no. I don't run mentorship. I am not going to run mentorship. So
Okay, okay.
yeah, I don't sell anything. I don't do anything. Everything what I am doing personally is completely free.
Okay, okay, okay. Thank you. It was very useful, buddy. It was very clean and neat. It was
Yeah,
very useful for us.
thanks to Vikash. Thanks to Vikash.
Okay, guys. The time has come
Okay, you can
to.
leave. If I have doubts, I'll clear and maybe I'll send you the recording, bro.
That is good.
Yeah.
So I hope there is no questions, right?
Thank you, Vikash. Thank you. Thank you so much.
It's pleasure to have you guys, right? And hope you guys make the best use of it, right? So
Thank you,
have a
man.
nice weekend and
Same to you,
good
buddy.
luck for the next week.